All right, so now let's move on to project cash flows. And I think this is the area where, there's not a lot to say. You've sort of been doing this, to be honest, in the pro forma financial statements. When we talk about project cash flows, we want our cash flow from assets, and that's defined as the operating cash flows plus any changes in net working capital plus any capital spending that occurs. And of course, when you think about, as an example, capital spending, typically that's a spend, that's a negative number. So we're just adding negative numbers. We're going to label our cash flows in the proper direction, and we'll just sort of add up so we can make this a little bit simple. And also remember that operating cash flow, OCF, is the earnings before interest and tax plus your depreciation expense minus taxes paid. And so basically we're going to create sort of our little statement of cash flows, and the key thing that we're going to be focused on is the operating cash flows, the change in net working capital, and then the changes in capital spending. The only other thing to mention here in the operating cash flows is just recall from class that we have some different ways to get at that operating cash flow, and you can sort of choose the method that works best for you.